What if I told you that Bitcoin is once again creeping toward that massive $100,000 mark, and that the biggest money in the world, pension funds, hedge funds, insurance giants, is quietly positioning itself before the next huge price explosion? Would you want to know which crypto ETFs they're loading up on, and which ones could give regular investors like you a chance to ride the same wave? Because right now, something big is happening. You can almost feel it.
Hey, real quick, before we jump into the video, please take some time to read the full disclaimer on the screen.
Bitcoin is moving closer towards six figures again, and for the first time in history, we have a long list of crypto ETFs that allow anyone, not just tech experts, not just crypto OGs, to get exposure to the market without needing a digital wallet, private keys, or any complicated steps. And when institutional investors start pouring billions into these ETFs, the ripple effect on the whole crypto market can be huge. So stay with me until the end, because I'm going to break down the 5 crypto ETFs that many investors are watching closely as Bitcoin gets ready for another potential breakout. You may even be surprised by which one lands as number 1. And while you're listening, here's a question for you. When do you think Bitcoin will finally break above $100,000 for real and stay there? Is it happening this year, or do you think it'll take longer? Drop your prediction in the comments because I'd love to see what the community thinks. Now, before we get into the list, let's talk about why Bitcoin near 100K is such a big deal. Every time Bitcoin has approached an all-time high, we've seen 2 things happen: extreme excitement and extreme doubt. People say it's too late. People say it's too risky. People say it's a bubble. Yet over and over, Bitcoin has climbed, corrected, climbed again, and proven that it's one of the strongest long-term performers of the last decade. If you zoom out on the chart, the pattern is almost unbelievable. But here's what's different this time. Institutional money is entering through ETFs. That changes everything. It means big investors don't have to worry about wallets or custody. They can simply buy regulated, familiar investment products. And when they buy big. So let's jump into these ETFs one by one, starting with number 5 on our list. The first ETF we're talking about has quickly become a favorite among investors who want pure Bitcoin exposure with extremely low fees. It's designed for long-term holding and for people who want the simplest, cleanest way to invest without worrying about anything complicated. And here's something interesting. Every time this ETF has seen a spike in inflows, Bitcoin's price reacted shortly afterward. It doesn't mean it's causing the pump, but it definitely suggests that large chunks of money flowing in through regulated products can create real momentum. Let me ask you this. Do you think low-cost ETFs will eventually replace direct Bitcoin buying for most new investors? Share your thoughts in the comments section below, because this shift could shape the entire future of crypto. The next ETF on the list is known for something completely different. Unlike the first one, this one tries to track not just Bitcoin's price, but also uses futures contracts to give investors more advanced exposure. That means it doesn't always move exactly like spot Bitcoin. Sometimes it can even perform better in short bursts. It's popular among traders who want something that reacts quickly to momentum. It's also one of the first crypto ETFs that got mainstream attention, even before spot ETFs became common. Many investors believe that as Bitcoin approaches 100K again, futures-based ETFs might see a new wave of short-term excitement. And tell me honestly, would you ever use a futures-based ETF, or do you prefer simple spot exposure? I'm curious how many of you are comfortable with more complex trading products. Drop your answer down below. Now let's move to number 3, which is one of the newest additions but already making noise. This one gives investors exposure not only to Bitcoin, but also to a basket of other top crypto assets. So if you're someone who believes that the next pump may not be only about Bitcoin, but also about Ethereum, Solana, and other major players, this ETF might feel like a safer, diversified bet. It's like having a small crypto portfolio inside one regulated product. And the interesting part? This ETF has been attracting slower, steadier inflows, almost like investors are treating it as a long-term savings product rather than a fast-moving trading tool. Here's a question. Do you think diversified crypto exposure will outperform pure Bitcoin in the next bull run? Go ahead and leave your thoughts in the comments. I want to see where you stand. And before we jump to number 2, if you're enjoying this video so far and you want more simple, easy-to-understand breakdowns of crypto, investing, and market trends, make sure you hit the like button, subscribe to the channel, and share this video with someone who needs to stay ahead of the next big crypto move. Supporting the channel helps this content reach more people, and it lets me know you want more deep dives like this. So thank you for being amazing. All right, now let's talk about the number 2 ETF. This one has a powerful advantage: liquidity. It has enormous volume, making it one of the easiest ETFs to buy and sell quickly. Big investors love this because it allows them to enter and exit positions without causing massive price slippage. And here's what makes it even more exciting. The amount of institutional money flowing into this ETF increased sharply during previous Bitcoin rallies. It's almost like watching a signal for what large investors are planning. When the volume starts rising, the market might be gearing up for something big. So here's a thought-provoking question. Do you believe institutional investors have a bigger influence on Bitcoin's price than retail investors now? Let me know your take in the comments because this debate gets more interesting every year. Now we've reached number 1, the ETF many investors consider the most important when Bitcoin is on the verge of a major move. This ETF has massive assets under management, incredibly low fees, strong brand trust, and extremely high trading activity. And what's really wild is how closely the inflows into this ETF have mirrored Bitcoin's recent rise back toward 100K. Every time big investors stack more shares of this product, Bitcoin's price momentum seems to accelerate. It has become one of the clearest indicators of institutional appetite for crypto. If you're someone who wants to follow the smart money, this ETF is often the first place to look. But let me ask you something even deeper. Do you think the introduction of crypto ETFs marks the beginning of Bitcoin becoming a mainstream asset like gold? Or do you think it removes the original spirit of decentralization? I'm really curious about your perspective on this, so please take a second and give your answer in the comments. The responses on this topic are always fascinating. Now let's talk about something many people overlook: why Bitcoin pushes toward 100K in the first place. Bitcoin behaves differently from traditional assets for 3 reasons. First, the supply is capped, meaning no central bank can print more of it. Second, halvings reduce the rate at which new coins enter circulation, creating natural scarcity. And third, global demand is rising faster than supply, especially now with ETFs making it easier than ever to buy. When demand rises and supply stays limited, prices move up over time. It's simple math. But here's where things get interesting. Every time Bitcoin breaks an old all-time high, it tends to go far beyond it before cooling down. This pattern has repeated multiple times in Bitcoin's history. So if Bitcoin does break above 100K, how high do you think it could realistically go before the next correction? Could it reach 150K, 200K, or even more? Go ahead and write your boldest prediction in the comments. And while we're at it, let's talk about the fact that you don't have to pick just one ETF. Many investors actually combine them. Some choose a pure Bitcoin ETF for long-term growth, a diversified crypto ETF for broader exposure, and a futures-based ETF for momentum trading. It all depends on your goals. One thing is clear, though. The arrival of these ETFs is bringing a huge wave of new money into the crypto world, and that's part of what's fueling Bitcoin's return toward the 100K level. But I want to mention something important. No ETF is perfect, and none of this is financial advice. It's always smart to research, understand the risks, and decide what fits your strategy. Crypto is powerful, but it's also volatile. One day it jumps 10%, the next day it drops 5%. That's part of the game. But with ETFs, At least you get exposure in a simpler, more regulated way. As Bitcoin gets closer and closer to that six-figure mark again, it makes you wonder, how many people will say, I should have invested earlier? How many will say, I missed the opportunity again? And how many will take action while the market is still building up momentum? Which category will you be in when Bitcoin finally breaks above 100K? Think about that and share your honest answer below. Before we wrap up, if you're enjoying this deep dive and you want more videos like this, simple, clear, no fluff, make sure to hit like, subscribe, and share this video with a friend who needs to get ready for the next phase of the crypto market. Your support helps the channel grow, and it lets me keep bringing you the most important updates. So as Bitcoin climbs once again toward that legendary $100,000 level, keep an eye on these ETFs. Watch their inflows. Watch where the smart money is going. And most importantly, stay informed, stay prepared, and stay curious, because the next crypto pump doesn't wait for anyone. Thanks for watching.